The weakness in the market continues. The Nifty is now down 75 points. The Nifty Bank below the 20-day moving average, much below 47,200 as well. But one of the stocks which has actually been lower right from the word go this morning has been Nestle. Now, remember over the holiday, that was yesterday, there was a report that came in from Public Eye. Their investigation report was on sugar in infant food. So Nestle stock is down around 4%, one of the biggest intraday falls that we've seen in the counter. And what was the outcome of that report was that there was presence of added sugar in the serving that they have for Cerelac wheat, which is the infant nutrition product. And more so, it was more in the low middle income countries as against the developed countries. So the list of the countries comes up for you. Thailand, for instance, had 6 grams of sugar per serving, added sugar that is. Ethiopia around 5.2, Pakistan almost 3, and India is about 2.2 grams. Now, the question is that if there is added sugar, which is not good for health as per Nestle and the UN itself, and there are countries where no sugar product is available, why is it that there is this variant available in countries like Thailand, South Africa, even India for that matter? To that, the company has said that over the last 5 years, they have reduced added sugar by up to 30% in their infant cereals portfolio. They continue to innovate, reformulate products to further reduce the levels of added sugars without compromising on quality, safety and taste. Here again the question, if there is a variant of no sugar available in UK and Germany, why not for India? CNBC-TV18 has written to the company and they are awaiting further clarification on the same from Nestle itself. How much is this in terms of their overall sales? Milk products and nutrition account for nearly 40% of the company's revenue. This segment includes dairy, whitener, condensed milk, UHT milk, and then infant formula, baby foods, etc. Given their market leadership in this space, even if half of their milk products and nutrition comes in from infant food, then that's about 20% of their revenue, almost as much as what Maggi was when the Maggi controversy erupted for Nestle. But be that as it may, we're not saying that this may balloon into something as big as that. There are a lot of other triggers to watch out for Nestle as well. The first one, of course, next week we have the March quarter results. Secondly, some of their key inputs like cocoa and coffee are surging. Cocoa prices are at a record high. Thirdly, the company has announced that they will look at increasing the royalty that they pay to the global parent from 4.5% to 5.25% over the next 5 years, which would imply an annual increase of 0.15% in royalty. So with margin triggers limited going forward and with this concern coming by along with the outperformance that we've seen in Nestle, maybe the street thought it's best to perhaps stay away, and as a result of which we're seeing a 4% decline.
Absolutely.
Thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.